Testing 1 2, testing 1 2, check 1 2, check 1 2. Hello, hello. How are we doing out there? Can you hear me? Hiya. Welcome back. Ed Ponsi here, your FX educator here on behalf of FX Street once again. And just want to say thank you for being here. I appreciate your presence and your questions and input are always welcome. Don't be shy. That's why we're here. Hey, you want to see something funny? All right, remember I took it out at 45, 117.45. If you missed it during the first segment, I cashed in the third portion of the Euro USD trade at 117.45. The high for today's candle is a half pip below 65. 65 was the target, but we took it out at 45. It never hit 65, and now it's at 39. So just think about, how am I going to feel if X happens? I'm going to change that, edit that down to 45. Whoops, 45, and turn it black because that's done. So we're all out of that one. But isn't that interesting, right? We took it at 45. It shot up right afterwards. It came within a pip of 65, but it did not touch 65, at least not on TradeStation. I realize that your results may vary based on which broker you're using because not every broker is showing the exact same quote. But I thought that was more than interesting, right? So that's over with a 445 pip profit. 445. Sounds good. Aussie, New Zealand, still in there. We're up 15 pips on that. No big deal. And Euro Pound we covered during the first. We covered all these during the first session. We're still long here. We haven't moved the stop. Right now the stop is very close to the entry, but we haven't gone beyond that point yet. Because the Euro and the Pound are both strong against the dollar at least. And so that makes this a little less. If you're wondering why this one's not taken off like a fireball, that's your reason why. S&P futures, green candle, but we're well off. We're off the lows. We started out negative, but we're also off the highs. And it's not looking like a huge move. Well, it's going to be a nice little gap up. Even, the close on Friday was around, it's a little gap higher, 20 points higher. I remember when 20 points was the average move. Okay, a couple of very interesting stock charts to show you. I don't want to forget these because Netflix, first of all. Remember this? That was the dark cloud cover. Ever since then, it's been heading down. Where does it head down to? The answer is going to be the 50-day moving average. That red line right there is the 50-day. That's where Netflix is heading. So it's currently it closed at 480, currently bid at 483. The moving average is about 460 now. That's where I would think this would be a buy. Remember, they've already reported earnings. And but it's funny how this negativity occurred before earnings. This gap is the actual earnings 3 days later. So when you see that bearish pattern, it's just telling you somebody knows something ahead of time. Tesla. Look at that engulfing. That bearish engulfing engulfs multiple candles. Not just the prior candle, but the one before that. So that huge bearish engulfing told you that it was going to jump down. It jumps down. Where does it stop falling? The blue line, this is the 20-day moving average. And if you can look back, you can see the 20 has been money for Tesla. And it's bid slightly higher. So what I would say is this. It's 1386 is the 20-day moving average is currently 1386. If I were a Tesla trader, I would be watching that moving average very closely. If it closes under there, or if it gets far under there, it's something you would probably want to take profit. I mean, I'm assuming that you've been part of that massive rally. You might want to take something off the table if it gets under the 20-day moving average. Why is that? Because look what the 20-day moving average has just been money since May. So that's like 3 months. So we'll see if that continues to be the case. So we covered Netflix, we covered Tesla. They're both bid slightly higher, but nothing to get excited about. Apple. I wanted to take a look at Apple too. Apple closed at 370 and it is looking at 375 open. I'm going to take the moving averages off of this chart because the only thing I'm worried about with Apple is this bull channel. And if we can stay inside that bull channel. If it comes out of there, then I would be worried. Now, just keep in mind, the first two stocks I showed you, Netflix and Tesla, they've already reported earnings. But Apple is coming on Thursday. I believe it's after the close on Thursday, July 30th. So just be aware of that. Also, a little programming note, I may have forgot to mention, I had to change my schedule this week. I will be here with you tomorrow instead of Wednesday. Wednesday, something came up, and so I'll be here on Monday, Tuesday, and Friday this week. Okay, and so we got that covered. And so when we're here Friday, we'll be able to see the effect. Let's say the after effect of the Apple earnings report should be very interesting. I think the thing that people misunderstand about Apple the most is this. They have so much money and they are constantly using it to buy shares of Apple. So by removing shares of Apple from the market on a near constant basis, they are making each share of Apple more valuable. Even if the company's business is fairly flat, the stock can still go up because of this phenomenon that they just keep buying their own shares. And they especially buy it if it dips. So if it dips after earnings, Apple probably comes in and starts buying their own shares to push it back up. Because they're going to buy them anyway. They might as well buy them cheap compared, relative to the current price. All right, so that's our little stock roundup. I know Carlos was looking at this one. That looks like a big, I don't know, that just exploded out of that triangle. This is SSSS, right? Oh, and DKNG, DraftKings, I find this fascinating that the stock just keeps coming back to this black dotted line at around 35.5. It's like a magnet. It keeps pulling the stock back in. So this stock, with sports starting up, a lot of people are looking at it saying, because you can bet on sports online using this stock, this website called DraftKings. And I think a lot of people look at, baseball just started again. Hockey starts very soon. Basketball and football are starting very soon. And so in the U.S., all the sports are coming back at once. And some people seem to think that that's going to be very good for DraftKings. But I just want you to be aware that that's got to be priced into the stock. Anybody can pull up a sports schedule and see what's going to happen. So that news is already priced in and the stock is stuck at 35.5. It just cannot get away from that line. Fascinating stuff. And it's currently bid 38 though. So I guess it's going to make a lie. It's going to pop off of that line, but let's see if it comes back. That's not the first time it happened, right? It's going to pop back up to 38 and change, but you can see how it popped right off of that line again. That is such an important line, at 35.60. Okay. And just remember, this is pre-market. It's up. Who bids them up pre-market? Retail. Retail bids them up pre-market, and then Institutional gets a chance to sell high. So we'll see what happens. I'm not a huge believer in this one. Amazon. Look at the double top on Amazon. Worth a look, right? Amazon getting a little bit double toppy over here. So where does Amazon go? Whoops, based on this pattern. Let me get the fill color right. Here we go. There, now you can see it. Now you can see that double top pretty clearly. Where does it go based on this? Well, if I were to measure, I would measure like this. You know, I tend to cut through the wicks. That's a little more conservative to cut through the wicks. It's about 3250 on the high side, and the neckline, so to speak, is, I'm going to say here-ish. So from 3250 to about 2900, that's 350. So if you take another 350 from 2900, that's telling you 2550. 2550 is about here, but I would not be that aggressive because of this little guy right here. You see that? That's a little bit of support, a little bit of a turning point. I would probably adjust my target for Amazon up to here. I'm not saying you should short it outright, but if you bought a put, you know, I think you might be able to make a little bit on this. Another thing to think about is that you don't have to do this as a standalone trade. Amazon could be shorted against a long position, sort of like what we did with Peloton and Planet Fitness a while back. We went long Peloton, short Planet Fitness. I probably closed it out too soon, but it went very well. There's Peloton. It's finally running out of energy after this. It's tripled since March, right? We were long that one. And then but it was not on its own. We were long Peloton because it's workout at home, but we were short Planet Fitness because it's workout away from home. And of course, you know, with the reopenings all being delayed, the stock just keeps grinding lower. Peloton keeps grinding higher, but Planet Fitness keeps grinding lower. And yeah, it's all about gold now, I suppose, says Carlos, and that's really what we're building up to. We're just get all this stuff out of the way, because once we start talking about gold, I mean, hold on to your hat. Look at that. Now, it looks a lot like the euro, right? You see all those green candles in a row. Euro USD also has all those green candles. And it did it, folks. We got above. I got to go weekly to show you this, because these patterns are just massive on gold. So 2,400 is my projection based on this massive bottoming pattern. But we just exceeded the highs from 2011, which I believe are the all-time highs, around 1915, 1920. Those are gone. We're currently at 1932. There's no overhead resistance. Gold's at an all-time high. And I think it's heading to 2,400. Will it have resistance at 2,000? Almost certainly. You know, people are going to look at that big round number and place their targets right. So I'm sure some people are placing targets right in that area. But I don't know. I wouldn't be surprised if there's a pullback from 2,000, but there's nothing to stop it from going to 2,000. It should be at 2,000 very soon and 2,400 eventually, according to what I'm seeing here. So 30, 10, 20, it's at the 30, it's at the 20. It could go all the way. Yeah, it's going to go all the way too. Because now, like, especially if you close at an all-time high today, that is going to generate some excitement all around the world. You know, remember, it's not just people in one country that get excited about gold. It's people all around the world. So then there's silver. Look at, I mean, on a percentage basis, this looks like even better than gold. look at the velocity of the move. Silver is clearly playing catch up here. And now that tells me retail is now on board. If you look at the pattern goes from 12.5 to 18.5 at $6. So that says 24.5. It's almost there. It got there very quickly. But based on the size of the pattern, it should hit 24, 24.5, 25, thereabouts. It's probably due for a little rest, but guys and gals, this stuff trades with a lot of emotion, gold and silver. So I wouldn't bet on it hitting resistance just because it's achieved its price target. There's no real resistance on this chart. There's nothing real here. I'm looking at the weekly, and I'm going to say 28 is going to happen, and maybe higher. But I think based on this chart, I would say 28 is going to happen. Right there. See that little guy? 28 is going to happen, in my opinion. Maybe might hit a little bit of resistance here, but remember, we're looking at 2012 and 2013, so it might be a little bit of resistance at 26, maybe a little bit at 28, but we're looking back to 2013. The world was a completely different place 7 years ago. So I don't know if I buy the idea that the only reason why that 26 or 28 levels might work is because there's simply nothing else to go on. There's nowhere else to hang your hat if you're trading this stuff, right? PSLV and PAS, these are silver ETFs, I believe. Look at the breakout on PSLV. Now that's a weekly candle and it's only Monday. Think about that. That's a weekly. All these candles are weeks. This week just started. So where might it go? PAAS also, right? And again, I'm sorry, that was last week because the market hasn't opened yet. My bad on PSLV. That was last week's candle. So today's candle doesn't say, but it's bid 880. Close at 829. It's bid 880. That's a pretty healthy move percentage-wise, about 6 or 7% higher for that one. And PAAS close at 36, bid at 38.66. So that's going to jump. And remember, those are weeklies. Peter asks, is gold helping or hindering the value of USD? I think it's the other way around, and we haven't even looked at the DXY chart yet, so let's do that next. And we said it would go to 94. There's my ABCD, and look, it's below 94. It's gone beyond the target. It's just a runaway train now, right? Yeah, look at all that dollar weakness. So that's a weekly chart, and I see 1, 2, 3, 4, 5, 6 consecutive red candles on the DXY weekly. And that last candle, it's only Monday. So really, they're all weekly candles, but that last one is only one day. And it's already been an amazing week for dollar weakness. And of course, dollar weakness equals euro strength. We took out our last target on euro with 445 pip profit, I might say. Industrial uses of gold and silver and copper, I would say, too, fall into that category. But you'll notice, right? Copper is moving, but it's not moving like gold or silver. So people never get emotional about copper, but they get emotional about gold and silver, right? By the way, that's a bull flag. I don't know if I want to call that a bull flag or a bull pennant at this point, but either way, these are weekly. This is a weekly, but I think I'm going to refer to that as a pennant at this point. For Dr. Copper, I think it's going to struggle when it hits 3. at least a little bit. But that looks kind of like a panic. It's too early to judge it, really. Like, I mean, my line is so close to the current price. So I probably don't really want to judge it yet, but that could end up being like just a little consolidation, a little bit of catch your breath, perhaps before the next leg higher. But if copper's moving up, I got to say that's good news for the global economy. Republicans and Democrats in America put on their Maynard Keynes hat now. I know, it's like, it's all normalized now, you know, like this eternal quantitative easing. The Fed also has dipped their toe into buying bond ETFs, and you know what's going to come after that, right? When they've bought all the bond ETFs and they can't carry anymore, that's when they're going to start buying index ETFs, stock index ETFs. My humble opinion. Look, the Swiss National Bank is already one of the biggest holders of Apple. So what are you going to do, right? So does the U.S. care that the DXY is down so low, or not really? Definitely not. And I realize, you know, that's the U.S. does not care about the dollar being down because, first of all, relatively speaking, let me show you something. Relatively speaking, it's not even that low, right? If we back it up, I'm going to make it a monthly. Relatively speaking, it's still high compared to 5 years ago, 6 years ago, 7 years ago, right? It's not down that much on a relative basis. And but here's the thing, and you know, a lot of countries want their currencies to weaken because they are export driven. So, you know, countries like, you know, Mexico, Brazil, etc., you know, they get a big boost from having a weak currency. Big exporters like China and Japan get a big boost from having a weak currency. The U.S., though, is a net importer. It doesn't. Does it help the U.S. at all to have a strong dollar? Only in the sense that everything the U.S. imports gets cheaper. So really having a strong dollar, if your country's a big importer like the US and you have a strong currency, that means you're getting everything cheap. The strong dollar is anti-inflationary. Now, the Keynesian, since we're talking Keynes today, the Keynesian method is to say, well, inflation is good. You want inflation. But I am going to go a step further and say only certain types of inflation are good. Because if you are artificially creating inflation via your currency, that doesn't help your economy at all. You see, what a certain school of economists believe that deflation causes bad economy, causes a bad economy. I'm going to tell you that that's the tail wagging the dog. Deflation is a symptom of a bad economy. And if you're treating the symptoms by trying to create inflation, you're just treating the symptoms. You're not treating the disease, right? If the economy is bad, creating inflation does not make it better. But a lot of these countries feel that by printing, increasing their money supply, that they're going to create inflation, and that's good. I guess in some ways, inflation can be good. In other words, it's not that inflation is good. You're trying to avoid disinflation and deflation. You're trying to avoid falling prices because then, you know, once real estate starts falling, you know, everyone's losing their wealth. So, yeah, but the U.S. obviously does not care about, Carlos says, yeah, they don't care about a weak dollar because it does help the U.S. manufacturing sector. And we know that Trump has been a big, you know, proponent of strong manufacturing in the U.S. and bringing manufacturing back to the U.S. And so, and Trump has clearly stated that he wants the dollar to weaken. But he doesn't run the Fed, of course. But I would just say that the dollar weakness is probably a sign of market confidence. Actually, there's a way we can gauge that. What do you think of this? Why is the dollar weakening? Is it because people are more confident? I think the way to answer that question is with this chart. Ten-month Treasury. It's not dropping. Now that's the monthly. You see how the Treasury, this is the price, not the yield, by the way. Whenever you see the price listed this way, that's the price of a 10-year Treasury. It's been going straight up for a year, pretty much. Look at the little bull flag there in the middle of it, right? But you could say, so I would say that if this chart starts falling, interest rates start rising, and that would be a sign of confidence. But I will say this, even though the Fed has cut interest rates as low as they can go, the real interest rates, market interest rates, they're not falling, they're stable. And I judge that by this chart. This is the 10-year US Treasury, and it has gone nowhere for 4 or 5 months of sideways activity. Why does this matter? If this chart goes up, people are scared. And if it goes down, they're less scared. I guess what I'm saying here is the dollar is falling not because of a lack of fear, which is what you would want. You would want the dollar to fall because confidence is coming back. But if confidence were coming back, this chart would fall. Then again, it's distorted because the Fed's buying. So there's always that factor. Is the Dixie heading to 80? There's not a ton of support now that it's come down to the D and down to 94 and the ABCD is complete. There's not a ton of support here, is there? There's a little bit right where we're at. I think this could be the moment of truth right now for the Dixie. If it's going to bounce, now's the time, eh? Look at that. And I realize we're going back a couple of years to find support, but that's the world we live in. Every trader is going to pull up the same chart and find the same levels. So I'd be surprised if we didn't get a little bit of a bounce based on this. But then again, I wouldn't be surprised because why? The trends are really strong. Dollar weakness, euro strength, and gold and the euro tend to move together. Gold and the dollar used to tend to move apart. That's been rendered a fallacy in recent years about gold and the dollar moving in opposite directions, but they're flying in opposite directions right now. So we'll see. I'm curious to see if we get any type of bounce off of this. If it's going to happen, it's going to happen soon. Because I have less faith in a bounce due to the level of emotion that I think is out there right now. And it's kind of a runaway train. Everybody's going to pile onto that trade. FOMO, right? It's like buying gold right now would be FOMO. But you know people are buying gold right now. You know, they feel compelled. The power of profit compels you. Okay. That's going to wrap it. Carlos says 91st. We'll see. I see what you're talking about, though. First of all, it's a big round number. And second of all, there's this area, this mess down here. Looks like it could get like really close to 90 if it breaks this current level. And I don't think this current level is that strong. We'll see. All right, gang, that's going to wrap. Where did the time go? This session just flew by. They just rang the opening bell at the New York Stock Exchange. So everything's starting to move around. Let me pull up the S&P futures one more time. They came back down a little bit, right? So S&P futures are unchanged from their open, but they did gap up. It did get a little bit of a weekend gap positive. We'll see if that amounts to anything. All right, gang. I'll see you back here tomorrow. Man, there's so much to talk about. I could go on all day. Why don't we just pick it up tomorrow where we left off? And everybody have a wonderful day. And I'll see you back here in 22 and a half hours. Okay. Thanks, everybody.